This podcast is for professional investors only.
I think in the current geopolitical environment, of course, you do have some short-term hiccups, perhaps in economic growth or a change in inflation environment. But I don't think they really disrupt any teams. I think one thing which can be of impact might be regulation, because some of the underlying growth teams might be dependent on specific type of regulation, which could be a headwind, but also a tailwind. So change in that environment might impact, let's say, the growth of a specific team or trend in the next couple of years. But we always look for those teams which are structured by nature and are relatively independent on economic or political cycles.
Welcome to a new episode of the Robeco podcast.
Disruption has been the trend of 2025. Upheaval is everywhere, from geopolitics and trade to the fields of technology, payments, ways of working, and more. Now, does a thematic approach help equity investors to cut through all the noise and find opportunities? Or could it be that investment themes or trends, which are considered to be structural, are also being disrupted in this case? My guests to discuss this are Ralph Oberbanschheit, he's head of Robeco's thematic investing capability, and Richard Spachens, portfolio manager for Robeco Global Consumer Trends. Welcome, gentlemen.
Thank you, Erica.
Thank you, Erica, for having us.
As thematic investors, how do you perceive the various geopolitical, economic and policy events and shifts taking place? So, Ralph, you joining us from Zurich, do they shape your investment processes and decisions at all, or are you sticking with a view that, you stick with your themes and your processes?
I mean, look, in thematics, we of course cannot neglect what's going on in the world. We see really a lot of disturbances. With the geopolitical issues, as you highlighted, that has implications. But however, we are not really in the business in forecasting some of the macro elements of investing. We're not really forecasting currencies or GDP levels or oil prices, as a matter of fact. But all these have implications on our themes. So where the impact comes is our fundamental bottom-up analysis, where the assessment of the current situation has to be pretty much minute per minute to be revalued or reassessed. So generally, it's not impacting per definition our themes, and we have a more longer-term approach, and volatile markets have been there in the past. But some needs to be rethought in themes. Think about duplication of supply chains, independent energy, financial independence, for instance, in the fintech theme. So that are all relevant themes in this world.
Mm. So Richard, just pushing a little deeper on that, how resilient are trends to any disruption, including the current policy-related, etc., disruption we're seeing? Do you need to adapt these themes in any way, or is it simply a matter of, Ralph says you keep focusing on the bottom up, but perhaps do you need to adapt the way in which you buy exposure to those themes?
Well, I think themes are very long-term in nature, but the way you can benefit from those themes can change quite a bit over time. Mm-hmm. So if you think about some of the technological themes, for example, at an earlier stage you would rather invest sometimes more in the suppliers or the hardware companies, then you move more to the software companies, then you move to the enablers. And so we have seen multiple tech teams evolve over the last, let's say, 10, 15 years. I think in the current geopolitical environment, of course, you do have some short-term hiccups, perhaps in economic growth or a change in inflation environment. But I don't think they really disrupt any teams. I think one thing which can be of impact might be regulation, because some of the underlying growth teams might be dependent on specific type of regulation, which could be a headwind, but also a tailwind. So change in that environment might impact, let's say, the growth of a specific theme or trend in the next couple of years. Mm-hmm. But we always look for those themes which are structured by nature and are relatively independent on economic or political cycles.
As a side note, give us an example or examples of regulation that could change your opportunity set.
Well, of course, one which is now a big topic is, of course, everything related to sustainability. Mm. So you do see, of course, there was a lot of acts being introduced by the previous government in the US. They are now a little bit, let's say, delayed. That doesn't mean that the problem is not there anymore about the sustainability challenge we have. But let's say in the short term, perhaps there might be less financial incentive for companies to invest in renewing their energy sources or changing, let's say, the way they look for new materials or things like that. Mm-hmm. But so that can have a short-term impact. Mm-hmm. But of course, these short-term regulations can have a huge impact on short-term share price movements. But we still believe the underlying theme, the demand for these solutions is still there. So there will also be a good time to pick those up. But it's just a matter of timing then.
Mm. And Ralph, if we look at what's happened in equity markets since the start of the year, arguably there is now a broadening away from that very narrow opportunity set around the Magnificent Seven and related. Also regionally, where Europe seems to be experiencing some sort of a renaissance. Does that, at a tactical level, alter your opportunity set?
I mean, yes, it does. However, we got to consider our long-term investment horizons. And for instance, you do find in some of the more nature-based themes already a higher exposure to Europe, just by nature of that sustainability has been more on the forefront for European regulators, governments, and companies. So that is for parts of our themes, less so for other themes. Also keep in mind we are looking for purity in thematic. If you deal with themes like mobility or fintech, you don't want to have any dilution from parts that are not really in this value chain of the individual theme. So therefore, by nature, we have a little bit more exposure towards mid-cap, and I'm generalizing here, of course. So yes, a broadening of the market clearly helps us because the focus has been over the last 2 years almost on Mag 7, on the US hegemony, not just macro, but also on the company level. And we are more than that. I mean, again, there's strategies that have a focus a little bit more on the US than others. But generally, we applaud that, as do other investors in other areas, of course, too. They got relatively speaking burdened by this narrow market, that narrow mindset that we experienced over the last 2 years.
And part of this broadening is also towards emerging markets, potentially in part because of the weakening dollar. How does that affect what you see? Do themes and trends behave differently in the emerging market universe, Richard?
Well, perhaps take a step back and what do we see as longer-term themes here at Robeco? And the main 3 trends we have identified, let's say on a global level, is transforming technologies. So how technology impacts every different sector of we have. Then we have changing social demographics, so it can be around aging, can be about a growing middle class. And the last one is preserving Earth. And I would say all 3 of them are relevant, of course, in every part of the globe, but at a different stage. So in some areas, developed markets are more advanced than emerging markets. I think what we do see in emerging markets, certainly if we look at technologies, that there's a lot of leapfrogging. So think, for example, about a lot of emerging markets, they immediately went to digital payments because they skipped the whole phase because they immediately had the technology available to go there. So that's one which we certainly see. I think on the social demographics, of course, the trends we're seeing in markets are very different. In many Western markets, it's about aging, immigration, whereas in emerging markets, of course, it's still a very young, fastly growing population, so different consumer needs as well for those consumers. And preserving Earth, so everything around sustainability challenges. I mean, it's a global phenomenon, but of course, different governments have it at a different priority level on their, let's say, budget proposals. So that's why also there, the theme is the same around the globe, but the stage where it is in the S-curve is probably different country by country.
And per portfolio, per theme, we have different areas of focus and specialization. Are you comfortable taking a developed market exposure to that theme as well as within emerging markets, buying that exposure?
Sure, because in let's say, take for example e-commerce as an example. I mean, in developed markets, it's pretty clear who are the obvious winners in e-commerce. So you can just ride the theme itself and just enjoy the growth of e-commerce, which is still growing a bit faster than retail. Used to grow much faster in the past. But if you look at, for example, at a market like Latin America, e-commerce penetration is only single digits, and which is much lower than the rest of the world. So there the market is growing, the tide is lifting all the boats. So you can also have multiple exposures, multiple player exposure, because the growth is still so fast. Whereas if you go more to a team which is a little bit more developed and more mature, then you need to do a bit more selective on the stock picking part. Maybe
to add a little bit to Richard's comments here, so more on the On the functional side, emerging markets really improved their governance, of course, over the last decade as well. So there's a closing the gap in terms of that in investability, but also think about opportunity sets for thematic in today's world with the geopolitical changes. So you might find really a granular emerging market approach interesting with supply chains changing, with tariffs changing. So I think that's one thing the team does really well. We have been focused on emerging markets for a long time now, really savvy investment there. And yeah, we utilize that opportunity set. I mean, some themes a little bit more pronounced than others, but I think the timing is really interesting also if you talk valuation of global equity markets, of course.
Rolf, which thematic areas are attracting the most attention from investors at the moment, and what would you say is driving that interest? Is there a risk that your target audience, your client base, might be influenced by fads or whatever's hitting the news headlines?
Yeah, I mean, we had in the introduction, we had a little bit the discussion about what drives thematic investors, and part of that is the curiosity, being interested in certain themes, and of course, the more granular a theme is, the easier is the story. But there was also the more patience you have to bring to the table. So more lately, with that narrow market exposure and the market performance, some themes just lagged relative to global equity markets, although they delivered against what we expected them to do. So in the current environment, investors are looking for more broader themes. To diversify a little bit away, diversify not just single stock risk, but also maybe regulatory risk, etc. And that can be done in a couple of themes. We have broader themes if you think about consumer, if you think circular economy, but also think multi-thematic, because there you have all kinds of solutions that we are thinking about, and we have a fantastic quant team that can assist there as well. So it goes more into this broader theme. However, that might also be just temporarily just a reflection of what investors see as of now. I'm sure there's always the curiosity coming down the road, and if you find an attractive theme that is relevant, you will always pique the interest. Maybe one more observation: a lot of our themes speak also to the nature of changes in geopolitics. So that is also a broader theme that we pick up, nature-based, but not just focus on one item, not just on biodiversity or on climate change, but really having an all-encompassing approach that diversifies us a little bit.
But with the popularity that we've had with Magnificent Seven, and also just the obsession or the focus on the rising trend in AI, Richard, is that something that might be driving, maybe even artificially, investor interest in such themes?
Well, I do think if we talk to our clients and also talk to other investors, I think the themes which probably are most where we see most demand is certainly everything related to AI, and also more around security in the broader sense. So it can be about defense, it can be about cybersecurity, but given all the geopolitical tensions. I think especially that last one is still in a very early stage. We still feel that's also very much an underappreciated trend also for the foreseeable future. Given, everything which is happening around us right now, of course, will be more demand for security. On AI, I do feel we are now at a stage where we're moving from the first phase of AI adoption, like we've seen, like I mentioned earlier before, into a second stage, so that we're moving from just everybody having access to AI, so you buy more the chip companies, now moving also, what are the applications, what are the use cases, how can we, in an efficient way, make sure we have enough power to make use of AI, because it's a very energy intensive industry. So AI, of course, is it's the fourth or fifth, whatever you call it, let's say, technological wave. So that's why it gets a lot of interest, but it's really expanding from that very narrow use case to more use cases and derivative, let's say, parts of the value chain, which are getting more interested right now.
I want to go back to how investors or asset owners see thematic investing within their portfolios, and Rolf touched on that a little earlier. How do you balance, Richard, your conviction in a theme with managing portfolio risk? Because, to an outsider, it might seem super concentrated if you focusing on, say, circular economy, how broad is that opportunity set? And given that, aren't you creating risks in investing there?
I think thematic investing per se is always a very high active share strategy because we are looking for those pure play companies, so companies with a high exposure to these individual teams. So that means you are certainly taking more bets, like Ralph mentioned earlier. You also get a little bit more mid-cap, small-cap exposure because that's the companies where we do have a bit of thematic, or where we have high thematic exposure. But we think it's very important to have to be positioned across the value chain so that you also diversify your risks a little bit within a portfolio. And some teams, of course, are very narrowly defined. Others have a little bit more the possibility to diversify across the value chain. So we do, in general, see, like Ralph also mentioned before, the broader strategies see a little bit more interest because that's where you can do a little bit more spreading of your risks. You're not too dependent on one specific segment of the market. But there is also still a lot of clients who say, well, we want to do the team selection ourselves, so we go for those niches and we rather invest in those specific teams because that's where we feel is the highest upside potential. Even it might lead to a little bit more risk in a portfolio as well. But we do feel there's a good trade-off between that risk and higher return potential for that narrow team as well.
And Ralph, some would argue that thematic investing struggles to outperform the average benchmark. So it can be tough. Of course, you could have years of underperformance and then years that fully more than make up for that. How do you respond to that?
Yeah, well, I want to put some visual in your head. Sometimes thematic feels like you're building a nice sandcastle at the beach. And it's all good and fine, but the creator of the sandcastle ignored the flood or the tide coming in. And all of a sudden, your sandcastle is wiped out and you have to start from scratch. It's sometimes how it feels, especially in times of higher volatility, because markets then tend to go, or market participants tend to revert to the mean, to things participants know. A neutral allocation in sectors, maybe in countries. And that's always an initial reaction. And hence the appetite seems a little bit limited. The performance seems to be, especially with more narrow themes, a little bit underperforming. But I think given where we are in 2025, I think there is actually a lot of transitioning happening. Geopolitics mentioned, AI mentioned, looking for where are the next enabling themes where they play a role. Energy transition is always, and you also face in some of our themes a low point, so to speak, in sustainable sentiment, or at least a lower point. So I feel like for thematic, again, the reversion to the mean, and we always in our bottom-up process, we always check in with our themes. Where are we in terms of, for instance, EV penetration in our internal milestone assessment? So that is relevant. Stick to the process. Reflect with clients. Be transparent what you do. And then these times shall pass. So again, high volatility, sometimes not as good for narrow themes. And we just came off a time of really high volatility with Liberation Day kicking it off.
Richard, like Rolf, you've been doing this for many, many years. What are your reflections on this, the tough times, and then even just the mental strength required to get through that, knowing that this is a solution that's going to be good for investors?
Well, I think that the discussions we have with clients is certainly what does it add to your portfolio to invest in thematic solutions. And I think, like mentioned before, thematics often have a different alpha driver than many of your other capabilities. They are highly active share. Very often, although not always, there's a growth angle to thematic investing because we are looking for those structural growth trends. Normally you have a growth bias, which not all funds, of course, have. So it's a diversification there. You have a little bit more mid-cap exposure, which hasn't worked, of course, in the last couple of years, but hopefully is up for a reversal. So that could be helpful. And I think what a lot of clients certainly say is that it's also for, if you want to talk to your end clients, it has a strong narrative. There's always a great story to talk around thematics, what's happening in AI, what's happening in mobility, what's happening in the smart energy or the sustainable energy segment. So there's always a nice, as some clients said, it's always a great topic to start a conversation with a client on, is talking about thematics. So I think that's, besides, let's say, more the financial reasons, there's also that angle, which is very important for a lot of our clients.
Yes. Time for a bit of a change in tempo with our quick quiz. So are you ready?
Sure.
Our questions with short answers. Ralph, where were you on Liberation Day?
Well, I remember I was at home and I couldn't believe the news, a blanket tariff on every country that the US dealt with. And I was like, oh, some genius came up with some, really, there was some work behind it and granular work, and was curious what instrument can I find to see instant market reaction. Usually currencies helping you out on that. But then it became pretty quickly pretty clear that that was just a blanket approach. There was no rhyme or reason behind it, and a lot of variables not considered in the announcement of the blanket tariffs. So that was quite frustrating to see how vigilant and really how quickly market reacted, but also looked through that there was not much behind it yet. So.
Richard, I'm going to ask you the next question. If you had to describe 2025's market moves in a movie title or a song title, what would it be? And Rolf is allowed to help you if you need to phone a friend.
Ooh. The markets, well, there's certainly something with a quick comeback, because I've really been surprised how quick the market has rebounded from, let's say, the April lows.
Yes.
When the market feared on all the uncertainty. And even though the uncertainty is still there, the market seems to have got quite a good hold of it. So it's something with a comeback kit or something like that, I would say is very much relevant for this market.
Good one. Now I'm going to ask both of you, which of the following 4 characteristics is the most desirable characteristic for a thematic investor to have? Rolf, starting with you, which of these 4? Patience, curiosity, innovative ability, or being very good at financial model building?
I'm doing a little bit the contrarian, because the others sometimes what thematic is about, but the model building is critical, because at the end of the day we're fundamental investors, and of course the others are, it's tough for me, they're equally important, but it's not just about curiosity, for instance, for me. So also you got to have the skill set. Think about markets are sometimes getting a little bit more institutionalized, and of course also wholesale investors becoming much more sophisticated. They want to know, hey, do you know that company inside out, and how is that relating to the theme? So a little contrarian answer you get here from me.
I like it. Richard?
Well, I would say certainly curiosity for me remains a key characteristic to look for also in new people perhaps in the team, is because for me change is the only constant in this world. You really have to assume that the status quo will not be there 3 or 5 years from now in certain themes. So to remain curious and to always challenge your own assumptions, I think for me is really important.
Now, in closing reflections, are there any emerging themes that we're seeing this year and perhaps having started last year that you think the market is currently underappreciating, but that could be big in coming years?
Well, I would say, and of course it's a topic being discussed right now a lot, is deglobalization. I think in the last 20 years, the teams are all moving towards a global world and a completely integrated supply chain. I think we're now seeing, we're at the beginning of, let's say, the reversal of part of that, because we do see more protectionism, we see more local production supply chains. So we see more reshoring, we see more interest in security to protect your data, your borders. So I do feel that is a theme which is early in its days and might have much more repercussions than we probably expect. So we think that's one which is here to stay.
Rolf, I want to ask you the opposite. Are there any themes that you feel that at the moment are being overhyped?
I wouldn't say overhyped. Everything has its place in investment, and markets tend to pretty quickly sort out what is hype and what is not. We're always skeptical of really, really narrowly defined themes. I remember I dealt with a railroad pitch, so to speak, and it was very narrowly defined. It all was linked to GDP growth. There were like 70 stocks that you can invest in. So we really try to avoid these kinds of like short-term themes, hypes. We look for some profitability of companies down the road. You cannot just invest in all kinds of unicorns. So I would say no, it's not. The market is, as I said, it's been really efficient in sorting that out. But one thought I want to leave you with, why things haven't happened. So you see a lot of, especially in sustainability, a lot of lagging of social themes, and the main reason is it's just tough to get the data, tough to engage with companies, because these social components are so enshrined in the DNA of companies, sometimes for decades or hundreds of years in some examples, but also with people. It's a very close to our heart subject. That's why it's tough to put numbers behind it, and I think the market was a little bit ignorant of that whole idea in the past. But no, there's nothing where I would say, hey, this is just people think maybe AI, but there's certainly applications for AI, unlike I remember the whole UMTS and 3G discussion in the late 90s, early 2000s. There was no visual result out of that. It was happening 7-8 years later with data streaming and mobile streaming, etc. Here we see a lot of the applications already. So I think market efficiency prevails.
Yes. And then finally, and as briefly as possible, why should investors consider thematic equity investing in 2025? What's its biggest draw for the next few years? Richard?
Well, like I said, it's a different alpha driver. It's a strong narrative. It has a growth angle, so it's a good complement to any broad global equity strategies.
Thank you. Ralph?
A lot of disturbances that we've experienced during the year are playing almost into the hands of thematic. I think supply chains and duplications of that being necessary, transition in energy, and I think we got more encouraged almost the more on the geopolitical front we've seen during the year.
Ralph and Richard, thanks so much for your time, for your insights. It was great talking to you.
Thanks, Erica.
Thank you. Thank you so much.
And thank you also to listeners. If you've enjoyed this episode, please subscribe and share the podcast link within your network. Stay tuned for more market perspectives in our next episode. This investor-themed podcast and Robeco's Financial Markets podcast are available on all major podcast platforms and on the Robeco website. Until next time.
Thanks for joining this Robeco podcast. Please tune in next time as well. Important information. This publication is intended for professional investors. The podcast was brought to you by Robeco and in the US by Robeco Institutional Asset Management US, Inc., a Delaware corporation, as well as an investment advisor registered with the US Securities and Exchange Commission. Robeco Institutional Asset Management US is a wholly owned subsidiary of Oryx Corporation Europe NV, a Dutch investment management firm located in Rotterdam, the Netherlands. Robeco Institutional Asset Management BV has a license as manager of UCITS and AIFs for the Netherlands Authority for the Financial Markets in Amsterdam.